Alright, what's up everyone? Welcome to probably the most requested video I've ever gotten, which is how you trade ABS, my strategy. And hopefully this video covers everything from the basics of the strategy, the confluences you need, the different types of entry you can get, the different types of trades you can get, and we'll try to cover everything. Now, before we start, I want to make a few things clear. First of all, I'm a huge believer that the trader makes the strategy, not the opposite. So it's easy to see someone making money and you think, oh, maybe if I trade their strategy, I'm going to make the same amount of money as them, which I don't think is true. I think you can make all the money in the planet with whatever strategy you're trading, as long as you're trading it correctly, you have the right risk management, and you're properly improving the strategy you're trading. Now, another thing is that I'm gonna try to make this video as complete as possible, but you're obviously not gonna master this strategy just by watching this. You need to do your own backtesting, journal your trades, look back at your journal, and also try to adapt the strategy based on your style of trading. So when I first learned this, I learned it one way, but I adapted to my own style of trading, and that's how you make sure you get the best out of the strategy. So now let's start. Now, first of all, these right here are pretty much all the confluences I use to make ABS a full strategy. Now, of course, I'm not gonna go over each of them and explaining what they are in this video. I'll just make sure that you at least understand most of them. And of course, you can add and remove according to your style of trading. But those are the ones that I particularly use. And I do plan on doing specific videos on each. And if you want help with any of those confluences, just join my Discord and you can tag me if you need anything. Now I will cover breaker blocks in this video since they are the basic of this strategy though. So let's get into it. So let's get to the basics of this strategy. So ABS, if you don't know, stands for Anticipatory Breaker Strategy. So it's all about breaker blocks. So first, let's look at what a breaker block is and how ABS works at the very basic. So a breaker block is usually what most people think of when they think of an order block. So a bullish breaker would be something like this. You have a low, a high, then you have another low that sweeps the first low, and then you close above the first high. So this right here would be a bullish breaker. You have low, high, lower low, higher high. Once you close above this high, this right here is your changing state of delivery, and this validates the breaker. So if this leg right here, you can get the last candle of the leg, this right here would be your bullish breaker. Same thing opposite, a bearish breaker would just be a high, low, higher high, lower low. Once you close below this low, this right here is your changing state of delivery. This validates this breaker right here. So this right here would be your bearish breaker. And more often than not, if you pair this with other confluences, this breaker should hold, so your trade keeps following the same direction of the breaker. Now, what ABS is you're anticipating the breaker and you're trying to take the trade before the breaker even forms, so the breaker can support your trade. And the way you do that is by using standard deviation paired with other confluences, so you can predict this reversal right here. So the way you do that, first you need to understand the legs of the breaker. So as you can see based on this drawing, a breaker has four main legs. So you have this first leg right here, the A leg, the B leg, the C leg, and then the D leg. The two most important legs that you need to be able to spot are the B leg and the D leg. So the D leg is the easiest one. It's the one that validates the breaker. So remember I was talking about how once we close above this high, this validates the CISD and the breaker. So this D leg right here is what validates the breaker. Same thing on this bearish example. This right here is your D leg. Since once it closes below this, it validates the breaker. So D leg is the one that validates the breaker. B leg, it's going to be the leg that's in the same direction as the D leg. So in this case right here, the D leg is bullish. So your B leg is also this bullish leg. You can just think A, B, C, D. So your B leg is the most important leg for ABS because it's where you're going to draw your fib. So the way you trade ABS is you're going to find a potential breaker, you're going to place a fib at the B leg, which in this case is this bullish leg right here. And what you're looking for, once you look at those deviations right here, you want to see a rejection from one of these levels. So if you see price tapping into these levels, for example, this level to right here, we tap into it, reject from it, this right here is an ABS rejection, which is a confluence. And once you pair this with other confluences, then you can get a trade. So you look at this region right here. This right here is your ABS rejection. And this is just one confluence. Of course, you're gonna align this with others, and we'll go over that too. So same thing in this bearish example, you have A, B, C, D. So this right here is your B leg. This is where you draw your fib. And you're gonna look for a tap into one of those levels and a rejection from it. So this right here is your ABS rejection. So this right here is the very, very basics of ABS. Now it's probably still pretty confusing. We'll go over some chart examples. But first, let's look at the different types of trades you can take with ABS. So first, let's look at reversals with ABS, which is probably the most classic type of trade you can get. So for this case, let's pretend that price is trading around here and you have a drawing liquidity sitting above and one sitting below. So let's say this can be any type of key level, any type of major liquidity. So let's say this right here is London highs and you have Asia lows right here. Now once market opens, let's say at 9:30 or at any significant open, price starts trading up towards this London highs. It's at that point that you think, oh, okay, price wants to take this drawing liquidity right here. So you could potentially take a reversal after we take this level and targeting this level right here. So you want to wait for price to sweep London highs so you can then target Asia lows. And the way you do that with ABS is, first of all, you're going to spot your key level right here, which in this case is London highs, and you're going to look at the leg that's going to sweep this level. So this leg right here is going towards London, and as you can see, we have a retracement in this leg. I understand that for some people it's hard to see the A, B, C, and D leg of the breaker, and one of the easiest ways to see that is just by looking at a leg that taps into a key level and getting the main retracement. This main retracement is going to be the B leg, since you're going to have A, B, C, and then D leg is this leg down that hopefully is the trade that you're catching. So you can see that this leg here is gonna take London highs. And if you look at this main retracement here of this leg, if you place a fib, you can see that price is tapping into one of the deviations. So this right here is your ABS rejection. You can see price taps into it and rejects, so that's a confluence. And you can see that if the trade does play out and price keeps trading below here, we're eventually gonna close below this leg, which is gonna validate this bearish breaker right here. So ideally, in a case like this, you're gonna wait for the ABS rejection, that's one confluence. We sweep London highs, that's second confluence, and then you're gonna see all the other confluences that you can use. So let's say, for example, we have an inversion right here. Let's say it's a 2-minute inversion. Let's say we close below this low right here, and we resweep this high, so this is also a CISD. And let's say we also have an internal SMT at these highs. Okay, so at this point, you have an ABS level aligned with your key level. You have internal SMT, inversion, CISD. So you have a lot of confluences aligned, and you have your high time frame draw below right here. So let's say you want to enter it after the CISD. You would enter right here, stop at the top, and you target whatever drawn liquidity you have below here. And we'll go over different types of entry and targets you can do too. But this right here is the basics of ABS reversal. You're spotting a high time frame key level, you're drawing liquidity, you're gonna get the leg that sweeps it, find the main retracement of this leg, and we will go over how you place the fib in different situations too. But you wanna get the main retracement, that's where you place your fib, and then you're gonna get a rejection from a level, that's a confluence. You pair that with other confluence, that's a trade right there. Now, there's a few other possibilities you can do inside ABS reversal. The easiest one, and probably one of the best ABS trades you can get, is when this is aligned with a PO3. So if you consider this right here as an accumulation zone, and this is pretty common, before a key opening. So for example, during pre-market, it's common that price is going to be accumulating, or right before 10 a.m. Sometimes you have an accumulation zone. Then this move up that taps into your key level, this right here is your manipulation move. And then the trade that you want to take and the move that you're anticipating is going to be the distribution move. So this right here is your ABS aligned with PO3. Another type of reversal you can catch is when you pair ABS with market maker models. So let's say you spot the first half of a market maker, which is something that looks like this. You can also, for example, place your ABS right here, counting that this is the B leg. And as you can see, we tapped into this 2 deviation right here. So you have the first half of a market maker model, you have your ABS rejection, you pair this with other confluences, same way that we did on the previous example. So let's say you have an inversion right here, or you wait for a CISD at this first low right here. So you can anticipate this reversal, let's say after we close below this low and validate this CISD. So you can take this reversal right here. And in this case, it's pretty optimal since you also have low resistance liquidity in those stacked lows right here. So this is how you would align ABS with market maker models, and your entry is aligning the ABS rejection with the smart money reversal at the top of this market maker right here. Now the second type of trade you can take with ABS are going to be continuations. So this one is pretty simple, and there's also going to be 2 different types of continuations you can get. So the first one is going to be if you have a clear drawn liquidity. So let's use the same example as before, and let's say we have London highs sitting above here and price is trading towards it. So you're very confident that price wants to reach those London highs right here. Now, if you couldn't get a reversal right here at the bottom and you want to take continuation, what you want to do is you're going to wait for a significant gap to be open in this leg. So let's say this move right here happens between 9:30 and 10 a.m. and at 10 a.m. we open a 15-minute gap right here. Now every time you want to take a continuation, you want to see a gap opening so price can tap back into it so you can then find an entry. So after we open this 15-minute gap, you want to see price retracing back into it and then rejecting from it so you can then take your entry. Now you can align this with ABS by getting this leg right here that taps into the gap and trying to find a retracement in it so you can then place your fib and use the ABS reversal. So let's say you have something like this. You have the leg that taps into the gap. You have a main retracement up right here. You place your fib. You can see that we have this tap into this level right here. So this right here is your ABS rejection. And then you pair this rejection with other confluences, same way that we were doing on the reversal. So you can get an inversion out of this, a CISD. We could have an SMT inside this gap too. And then that would be your entry targeting your original drawn liquidity. And to know how to place the fib here is the same thing as the ABS reversal. You're waiting for a price to tap into a specific level. In this case, it's this 15-minute gap. In the reversal, then it's going to be an external target. But all you got to do is look for the leg that taps into that level and find a main retracement on that leg, which in this case is this bullish leg right here. And remember that also this leg where you place your fib is always going to be the same direction as the trade you want to take. So that makes it much easier. So this right here is the first example where you can take a continuation. Now it's important that you still have your drawn liquidity intact. If price takes your main draw before you get an entry like this, you cannot take this entry. So let's say in the same example here, we have London highs right here. Price sweeps it, we open a gap, we tap back into it right here. So let's say this is also a 15-minute gap. And a lot of people, they try to take continuations out of this. So they try to take a trade like this, retargeting this high. And this high right here is not a good drawn liquidity. I already did a video on liquidity and draws, so if you want to watch that, but this right here is not a good draw on liquidity. So the only continuation you can take if we already took our draw is going to be if we leave low resistance liquidity at RTP. So it would look like something like this. As you can see, we have a lot of stacked highs right here. So this right here is low resistance liquidity. And at that point, you can take a continuation out of this again, because you're not targeting this high alone as a high resistance liquidity. You're targeting this whole low resistance run. So this right here is a valid continuation. You can do the same thing as we did on this one, placing the fib, spotting this leg. Now, sometimes this is going to be way harder to draw the fib since you have a lot of retracement here. So sometimes you can wait for a resweep inside this gap or go into the lower time frame, and we'll go over those things once we talk about fib placement. But just know that those are the two types of continuations you can take. One, if your draw is not taken, and two, if your draw is taken, but you have low resistance liquidity at your TP. So these right here are the two types of ABS continuation, and you can pair this with other confluences. So for example, you could use this with OTE. So for example, this would be an example of an ABS continuation with OTE. So let's say you have a high time frame range right here, and price is trading down towards drawing liquidity. So let's say that price is trading right here, and you think price is gonna reach this low right here. Now, if you get this range right here, you can use a fib to get the OTE levels. So OTE is gonna be from 0.71 to 0.79. So right here would be OTE of this range. And let's say that OTE here in this case aligns with an unfilled gap. So let's say you have a 1 hour gap. So you can see in this region we have a 1 hour gap and OTE aligned. So this right here is a potential level where price can reverse from. So if you look at this leg that taps this region right here, you get the main retracement. That's where you place your fib. You can see that we have a tap into this zone right here. This right here is your ABS rejection. So at this point you have a delivery from a 1 hour gap, you have an ABS rejection, you have the OTE of the high time frame range, and then you can just find an entry, let's say an inversion out of this, and then you take continuations targeting this original drawing liquidity right here. And same way you can see with ABS, once we close below this leg right here, this validates your bearish breaker, and this sponsors this trade to your original target. So this is an example where you can use another confluence to take continuations, in this case OTE. Now, what most people struggle with ABS is knowing how to place your fib in what leg and in different situations, because it's easy when you're drawing something like this, but when you're actually looking at the charts, there's going to be a lot of legs, a lot of candles, so a lot of times can be kind of hard to find the leg to place the fib. So I'm going to go over a few situations where the way you're going to place your fib is going to change. So the first example would be the classic, where you have a key level, and in the leg that taps this key level, you only have one retracement. So this right here is going to be the easiest situation to draw your fib, since, there's only one possible placement in this case, which is this one retracement. Now, sometimes this leg that taps this key level right here is gonna have multiple retracements. So how do you know which one you draw your fib? So the first case, let's say you have a few retracements here and you don't know which one you're gonna place your fib. So if you have too many retracements, what you do is you go higher on the time frame. So let's say you're looking at the 1 minute time frame. Sometimes if you go to the 2 minute, so if you're going up a time frame, some of these legs are gonna disappear and you're only gonna have one. So this is gonna turn into this first example. So this would be also a pretty simple solution. You can just go up the time frame and see if you only have one significant retracement. Same thing if you have no retracement in the leg. So if you have something like this and you don't have a single retracement, a single down close candle in this case, then you can go lower time frame, and then sometimes you're gonna see a retracement happening in the lower time frame. So for example, you're looking at the 1 minute right here, there's no retracements. You can go to the 30 second, and then there's gonna be a retracement. Now, sometimes even moving through time frames is not gonna work. So one of the things that you can do is, let's say you have two retracements and they are about the same, so they look pretty much the same. You don't know which one you're gonna place the fib. So what you can do in a case like this is you can just place the fib on both and see if one of the deviations align. So for example, this second fib here, you have this pretty nice ABS zone right here. And you can also have this level 4 from this first fib. So this region right here aligns both levels, so you can use this rejection like usually. Now sometimes this is gonna align even better, so let's say this leg here is a little bit bigger. So now you have the 2.5 on both fibs aligning, and that happens because this retracement is much bigger than this one. So you can see this zone right here is a pretty nice ABS rejection too. Now if you feel like this leg is just like too small and the levels are not even reaching there, then you can just remove this fib, since the levels don't even align with your high time frame key level, which is the main point, right? You want to align one of the deviations with the key level you're waiting to get swept. So this is pretty common for me to do too. I'll just place a fib on both legs and see if they align. Now if you have a leg with a bunch of retracements, and even if you go up or down time frames, or if you put on both, it doesn't work, or a leg looks super chopped and you can't really place a fib anywhere, then this is not even a good leg to place a fib, so you don't even have to worry about. Don't even try to place a fib if you feel like the leg is too ugly. So like in a case like this, I'm not gonna try to place a fib on all of those retracements, because then you're gonna have 100 deviations up here and it's not gonna work. So this would not be a leg that's good for ABS. And ABS works much better if you have a high volatility market with clean delivery, because then if you have a super choppy market, then you're gonna have 100 breakers and it's not gonna work. Now another thing about the fib that I forgot to talk about was the difference in each of those levels. Now if you look at the inside of the fib, so from 0 to 1 right here, all those levels in between them are not ABS. So this is just like retracement tools. So like the 0.5 is EQ of the range. This right here is OTE. So this right here is not ABS. I just keep it in the same fib to make it easier. I don't have to keep changing the fibs I'm using. The ABS levels are the ones that are external on the fib. So around the 0 to 1 right here. Another thing is you can see that my fib is symmetrical. So the distance from 1 to 1.5 and from 0 to negative 0.5 is all the same. So it doesn't matter if I draw the fib from down to up or from up to down. Those deviations are going to be the same because the fib is symmetrical. And you don't have to worry too much about what the levels are. So if it's negative 1 or negative 1.5, or if it's 2 or 2.5, like what matters is if you're getting a rejection from a level. Now with that being said, this right here from 2 to 3, and the same way from negative 1 to negative 2, these right here are, from my experience, the one that works the best. I don't usually take ABS trades, or I don't rely as much on the rejection from the 1.5 and from the 4 as much as I do on this one. Usually, like 90% of my trades, I'm gonna look for a rejection from either the 2 or the 2.5 or the 3. Same way up here from the negative 1, negative 1.5, and negative 2. So that's why I have this purple line on these ones, because from my experience, these ones are the ones that have the highest presence and win rate. Now another thing is you can use the fib as a target. So some people, instead of targeting draws and liquidity, they will target deviations, and you can do that. I am not a huge fan because I think price is gonna try to target liquidity, not the deviations. But if you see that a specific liquidity pool matches with a deviation, then I would say that target is even higher probability, so you can target that pretty confidently. Okay, so this was a lot of information. Let's look at what ABS looks like on the actual chart. So first let's look at some reversal trades I took with ABS, and hopefully this should help it explain how ABS actually works. So in this case, reversals, you're waiting for an external target to get taken or whatever high time frame key level you want to get taken. So in this case, I was looking at this high time frame equilibrium range right here at this line. I'm pretty sure this is also paired with an unfilled gap and some other confluences. Now, as you can see, price was trading towards it, and in this leg that taps your key level, you have a main retracement right here, which is this leg down. This is where I place my fib. And by the way, when you're placing your fib, you want to include the full leg, so that's including the wicks. You can see I'm going from the highest point to the lowest point of this leg. And sometimes going up or down time frames can also make the leg clearer for you to place your fib. So if you feel like you don't really know where the swing is, just change time frames to make it clearer. So in this case, I place my fib here. You can see that we have this ABS zone right here where price tapped into it. That's your ABS rejection. We tapped into the key level. And then at this point, we accumulated a little bit. We had a 30-second inversion, a 30-second propulsion block. Propulsion blocks are basically just two order blocks aligned. So this is pretty much just an order block. And the 30-second right there was my entry. And I was targeting this 15-minute unfilled gap. A pretty easy target with ABS is just target where you place your fib. So this right here was an unfilled gap, so this was my target. So you can see, pretty simple. You had an external key level, price tapped into it. You look at the leg that tapped into it, place your fib on the main retracement, wait for a tap into the deviations and a rejection, right? You don't just want to see a tap, you want to see tapping and rejecting from it. I aligned with my entry confluences, so the 30-second inversion. We also inversed this 1 minute gap right here, the 30-second propulsion block, and then targeting this 15-minute unfilled gap. Second example here, you can see this is also a pretty nice PO3 example. So you can see we have this small accumulation zone right here. Price breaks out of that range. We are waiting for this key level right here to get tapped, which in this case is this 15-minute unfilled gap right here. So the leg that taps into it, we get the main retracement, which in this case is this bullish candle right here. This is where we place our fib. You can see the ABS levels right here. We tapped into it, rejected from it. We also have an external SMT in these lows, a 30-second inversion. That's my entry. I entered after the inversion and then targeting these accumulation highs right here, which probably was also an unfilled gap. So you can see same thing here. You have a key level that you're waiting to get tapped. And that's also why it's important for you to understand liquidity fully when you're trading ABS. We paired this with the rejection from the ABS that the fib was drawn in this leg right here. SMT, inversion, targeting those highs, pretty easy. Same thing here. We have this 1 hour unfilled gap and this 1 hour OB aligned, and we have data highs at the top. So I was waiting for one of them to get taken so I can target the other. As you can see, we ended up taking this 1 hour unfilled and 1 hour OB through this SMT right here. Now this leg that taps into that level, and in this case we didn't actually tap the level, but we had the SMT, so it works the same way. So in this leg right here, we have this main retracement, which is this bullish leg. This is where I place my fib. We have a tap into those 2.5 to 3 deviation, reject from it, 1 minute inversion, SMT, that's my entry, targeting data highs. Same thing with this one's a pretty recent trade. I wanted to see this high get reswept, so that's my key level that I'm waiting for. This leg that taps into the key level, I place my fib on the main retracement. Now this is one example where we have two retracements where I'd say are the same. So we have this retracement right here and this retracement right here. And I actually placed my fib on both when I was trading. I just got rid of this one, since you can see that in this one, this is the one that the breaker held. So I placed my fib in this one. Price taps into this deviation right here. Reject from it. We had a 30-second inversion, we had a CISD right here, and we have a 2 minute inversion, and also those two 1 minute also got inversed. So that was my entry, targeting data lows right here at the bottom. We also have low resistance liquidity in this leg. So in this case right here, I placed my fib on both of those retracements, and this region right here had multiple levels aligned. So this is an example where you would just place on two legs and they would align and it works the same way. But you can see here with this, when this trade started playing out and we closed below this low, this right here is our bearish breaker. You can see that we respected it. So I just got rid of this fib to make the image more clean. Now let's look at some continuation trades we're using ABS. And this is also one way you can use PO3 with continuation. So this is what I was talking about, adapting ABS with your way of trading. You can pretty much use whatever confluence with whatever type of trade you can, as long as you understand the confluences and you know what you're doing. So in this case right here, I use PO3 with a continuation. So I had my main draw right here being this 15-minute OB. So we have this accumulation zone. During this move down, we open a 15-minute and a 30-minute gap. Remember, if you want to take continuations, you need a gap to open up. So price retraces back to that gap. The leg that taps into the gap, we have this main retracement right here being this bearish candle. So this is where I place my fib. We have the ABS zones right here. We tap into them, reject from it. We have a 1 minute inversion right here. That's my entry targeting my original drawing liquidity. Right here, this is also a pretty nice one, and this is also an example of what you do when there's no retracement in the leg you're looking at. So right here we have this accumulation when 9:30 opens, and we open this 5-minute gap right here. Now what I'm expecting is price to tap into it and then go back to this external draw right here. So that's what price does. We break out of this accumulation range, we tap into the 5-minute, and then as you can see, this leg down here that tapped into the 5-minute, there's no retracement here. So this is a situation where you just go down on time frames. So you go to the 30-second right here, and as you can see, now you do have a retracement in this leg, which is where I place my fib. You can see we tapped into this deviation right here, rejected from it, and then out of this we got a 2-minute inversion, which was my entry, targeting that external high right there. So pretty nice continuation right here. Now let's go over the types of entries you can get with ABS, because there's a few options you can pick. It's going to depend a little bit on what type of trader you are, and some are safer, some are higher reward than some. So we'll go over them right now. So the first entry you can get with ABS is using inversions. Now using inversions, you have two options. The first one would be waiting for the highest time frame inversion in a leg. So let's say that you want to take a continuation right here. So you're waiting for a gap to open. Let's say we open a 5-minute right here. Price trades back into it and you want to take longs off of this. Now this leg right here that taps into the gap, let's say there is a bunch of gaps, but the highest time frame in this gap is a 3-minute gap. This right here, waiting for the 3-minute to get inversed and then entering off of it, this is the safest entry you can get with ABS, and this is overall extremely high win rate. And the reason for that is this inversion, since it's the highest time frame, it's bare minimum gonna deliver to the nearest internal high, which is likely gonna be your break-even point. So it's very rare for you to lose a trade taking the highest time frame inversion like this. And this is also what I would recommend for most beginners, since having high win rate can be very beneficial in the beginning. Now, the bad side to this is that a lot of times you're going to miss your entry, and a lot of times also because of the anatomy of this leg, you're going to have a pretty mid RR. So in this example right here, this would be a 1 to 1.4 RR trade. Let's say, for example, that in this leg right here, you have a 30-second right at the beginning of the leg. If you enter off of this first gap, you could get a much better RR. As you can see, same trade goes from 1 to 1.4 to 1 to 7.4. Now, of course, this is going to be higher RR, but there's also the possibility that you tap into this high time frame gap and then just reject from it and you get stopped. So how do you enter off of the non-highest time frame inversion on a leg? So there's going to be a few scenarios here. The first case is, let's say you have a low time frame inversion right here, and the highest time frame inversion is like way above in the leg. So let's say it's all the way up here. So let's say this is a 3-minute gap and this right here is a 30-second. So in this case, you can take the 30-second because by the time you tap the 3-minute, you can just move your stop to break even. And then if the trade runs, great, you're on a 7 RR trade. If it doesn't, you get break even and you might get a re-entry at the 3-minute. So this is pretty nice. If you see that you have a nice room between the gaps, you can just take the first one and move to break even on the second. Now another thing that can happen is, let's say you have a resweep at this low right here. So something like this. So once we resweep this first low, we create this new bearish leg, and in this new bearish leg we'll probably have a pretty low time frame inversion, and then you can just enter off of this inversion and break even at this internal high right here. So it kind of works the same way as this first one, where this new gap is going to give more room to your trade and you're just going to go break even at the internal high. So if it rejects from the second gap, let's say right here, you're going to be break even already, so you're chilling. Now the last case with low time frame inversions are going to be if you have a bunch of inversions of different time frames in the same leg and there's no way you can move to break even early. So this right here is going to be the riskiest entry you can get with inversions, but a lot of times it's going to be very rewarding. So let's say you want to take this reversal right here and there's a 1-minute gap right here, but there's also like a 2-minute right here and a 5-minute right here. There's no way you can take the 1 minute and move to break even before we tap the other gaps because they are pretty much in the same place, right? So the only way you can take an inversion like this is if you have, one, enough protection on your stop loss, and two, you have a lot of Confluences stacked, so you're very confident that the trade is gonna hit. So let's say, for example, that this is the best reversal setup you've ever seen. So you have your ABS rejection right here. You have a tap into, let's say, a 1-hour gap. You have external SMT at this low. You open a 15-minute right here that you're targeting. And let's say 10 a.m. opened exactly right here. So you have the 10 a.m. open, low, high, close. So this right here is like A+ perfect setup, right? In cases like this, sometimes you can enter it off a low time frame inversion because the setup looks great, you're super confident about the draw, and you're willing to take the risk and not wait for a higher time frame inversion. But only do this if you're super confident about the draw, about the setup, and you have protection on your stop loss. So for example, this SMT right here, it gives protection at your stop loss. We shouldn't necessarily resweep this if we're getting the inversion. Sometimes you can also get a resweep right here and get, for example, an internal SMT. So now you have stacked SMTs at your stop loss, and you also have, let's say, a CISD right here. So this validates this order block right here and it gives extra protection to your stop loss. So this is an example where you could take the lower time frame inversion. Now, second type of entry you can get that's not inversions are gonna be CISDs. I really like CISDs when trading ABS since it pairs very well with the ABS rejection, and it's pretty simple to spot also, mainly when you have a resweep at your stop loss. So let's say you have a key level right here, let's say you have a 30-minute gap and you're expecting a reversal right here. So you have your ABS right here, we reject from the ABS inside the 30-minute gap, so this is your ABS rejection. And let's say we go back and resweep this high. Every time you resweep a high and you close below this low, this right here is your CISD. And sometimes you're not gonna have a lot of gaps in this leg, or sometimes you have a lot of gaps and none of them look pretty good. And so in cases like this, you can just enter off of this CISD. So right here, and targeting whatever draw you have. Now, of course, you can pair the CISD with inversions. In this case, would probably be the best scenario. Now, the third type of entry you can get are gonna be purely off of a rejection. So obviously ABS is around the ABS rejection, and sometimes you can not even wait for an inversion or a CISD, you can just enter off of the rejection. Now, a lot of times the rejection is gonna be a lower time frame inversion or a CISD, That's why, if I'm looking at the 1 minute chart and I see a rejection from the ABS level, I go to the 30-second or the 15-second and I see if there's a CISD or an inversion down there. But a lot of times, let's say there is a potential reversal zone right here. Price trades into it. You have your ABS right here. We tap into the ABS level. We reject from it. If you are super confident in the draw, you're super confident that, let's say you have all the confluences aligned and you're super confident that you're going to reverse, you could just enter off of the first down close candle right here. So you see a down close candle after the rejection, that's your entry right there. It's the riskiest, highest RR entry you can get with ABS. Now, here are a few things about it. One, only do this if you're extremely confident and you know what you're doing. This requires a lot of discretion a lot of the times. Two, make sure you have protection on your stop loss. Same thing with the low time frame inversion. The more protection you have, the better. And three, you can pair this with other rejection confluences. So let's say you tapped into a rejection block or you tapped into a soup, right? So you had a significant sweep inside of gap. So that's a turtle soup. Sometimes those things can match pretty well with this rejection entry. Now, as I was saying, you can still take those with the other confluences if you match it with CISDs or inversions. So let's say you have a down close candle in the 1 minute, right? So you're thinking, oh, we have a rejection, let's enter. But it's much better for you to just go down time frames. So let's say the 30-second or this 15-second, and just take a CISD or an inversion on the lower time frame. So let's say you have a 30-second CISD and you have a 15-second CISD right here. So you can just use those confluences to enter instead of the rejection, because it gives much more safety if you actually know, okay, we have a 15-second CISD and a 30-second inversion. You're not just entering off of the first down close candle. And the reason it's super easy to get stop rated by just taking the first down close candle is because since you're tapping into a key level, you can expect a rejection from it anyway. So a lot of times you're gonna just naturally have a rejection, and then price keeps trading into it. So it's super easy to get stop rated if you don't know what you're doing. And even if you know, you're gonna get stop rated a few times. It happens. It's not a perfect model either. But this would be our third possible entry with ABS. Now I think this is pretty much it for ABS. Hopefully this video is a nice starting point for you if you want to start learning it. Now, as I said in the beginning, it's probably still very confusing for you if that's the first thing you've ever watched about ABS. So if you want further help and you want me to look at your trades, look at your backtesting trades, or you just want to ask me any questions or watch me live trade, you can do that for free. Just join the community in the description. Another thing is, as I said, it's super important that you do your own backtesting, journal, look back at your journal, and try to improve as much as you can. It took me multiple months for me to actually learn the strategy. Another thing is, I try to put the most amount of information possible in this video, but trading is never black and white, so there's always going to be small differences from one trade to the other. So if you want to know exactly what to do in very specific situations, you can just tag me on Discord and let me know. I'll reply. And of course, I can't cover everything in one video. There's infinite possibilities. And hopefully, the more you trade, the more screen time you get, and the more you backtest, the less surprising situations you should get, and you should know how to react to whatever type of setup the market presents. So yeah, hopefully this video was useful, and shout out to everyone that watched this until the end. And yeah, peace out.